All right, well, welcome back to module number 4. In module number 4, we have 5 different lessons. The first 4 lessons are just talking about the different investment strategies that are available to us as real estate investors. Again, I'm not teaching these strategies so much as just going over them very quickly at a very high level. And the whole purpose of this is that at the end of Module 4 in Lesson 5, you're going to be presented with a couple different scenarios. And the question is, what would you do? And the whole point is to allow you to open up your mind to different opportunities. So many people get stuck with one idea, one concept, that they fail to see other opportunities. Now, I'm personally of the mindset and belief that you pick a strategy and you focus on that strategy to become the expert in that industry. So, for example, if your strategy is to buy and hold properties, then you should not get involved in doing flips and lease options and everything else. However, you should understand how they work, simply because when you have more education, more tools in your tool belt, it just gives you more options. Whether you take advantage of a lease option directly yourself, or whether you identify a lease option and you assign it to another individual. So that's the whole purpose of module number 4. So let's just jump in here. And the first lesson is going to be on buy and hold. Then lesson 2, we'll do the buy, fix, and sell, or better known as flips. Lesson 3, we'll talk about assignments. And 4, we'll talk about lease options again. And lesson 5 then is the exercise of what would you do. So with the buy and hold strategy, this is applicable to pretty much any size of property. It depends on your plan, what your goals are. So for example, with the 5 Homes to Freedom program, that's focusing on single family suited houses, or you can call them duplexes if you wish. And that's definitely a buy and hold strategy. However, depending on the strategy you're following within that program, you could still be involved in some short-term sales as well. It is applicable to duplexes, triplexes, fourplexes, which are all residential mortgages, or all the way up into much larger apartment buildings where you get into the more commercial. Now, holding for long term, that's sort of open to interpretation for myself. I consider 5 years or longer as long term. If I was to be doing a lease option, a 3-year lease option, to me that's not long term, that's a short term. It's also not a buy and hold, but the time period is short term. The nice thing about buy and hold also is that you are able to benefit from all profit centers. You experience different classes of buildings when you're looking at the larger apartment buildings, or even fourplexes as well. And that's your A, B, C buildings. The biggest bang for your buck is definitely in the C quality buildings because they're older, a little bit more tired, run down, better opportunity to buy at below market value, obtain some instant equity, yet still achieve pretty decent cash flow from the property. So that's talked about in much more detail in the Apartment Building Wealth Generation Program. It's also slow and steady, so don't kid yourself. This is not a get-rich-quick scheme with the buy and hold. It's a slow and steady model. It's all, that's a big part of the reason why so many of the wealthy people hold their wealth in real estate, because it is very steady. You get a lot of foreign money coming into our countries because they see that our economies are very stable. The real estate is a very stable market. It increases in value nice and slow, but more importantly, from their perspective, it's steady, it's safe and secure. So that's a beautiful thing about the buy and hold. It's also recession resistant. I won't say it's 100% recession proof, because I don't think anything really is. I came to realize this during the 2007-2008 financial crisis, the downturn in the market. During that time, we never really noticed or felt the recession, and our net worth actually increased in value. And the reason being is that when the economy experiences these hard times, recessions, a lot of people lose their jobs, they're downsized, they have to relocate for jobs. And unfortunately, a lot of people lose their homes during these times, and or they have to downsize. They become renters. And during these recession times, typically what happens is the vacancies in your building will go down, therefore the cash flow increases. Higher cash flow profitability increases the overall value of your building. So that's a beautiful thing about the buy and hold. It is recession resistant. And it's also just going to become more and more popular and greater demand because as time moves forward here, we have a lot of new immigrants coming into our countries. And there's nothing wrong with that. But these people need places to live. And the demand is just getting greater and greater. You also have the aging demographics. So you've got older people downsizing, selling their houses, looking for more affordable accommodations that are easier to take care of. So that's putting more pressure on the buy and hold market as well. So this demand is not only high right now, but it's increasing in the future. And to build affordable housing is just unheard of unless you've got government subsidies to help do this. Therefore, the demand is going to continue to increase and the supply is going to continue to remain low. Therefore, having a good solid buy and hold portfolio is a very wise move in my opinion. I'm including a copy of the property analyzer for large buildings. If you're already part of the Apartment Building Wealth Generation Program, you have a copy of this and you will know very well how to use it. There is instructions up in the top left corner of the analyzer to help walk you through it, but basically you're inserting information into the light blue areas there. It's pretty easy to use and will help you determine whether it's a good deal or not. I'm also including two single-family home analyzers. They're virtually the same analyzer for single-family homes or duplexes, small properties. The only difference is one's US and one's Canadian. And the reason that there's two different ones is because they're the land transfer taxes or the taxes related to the sale of properties are different in different states and different provinces. So that's taken care of in the purchase costs section. And also in the financing, that's another difference between the American and Canadian lending is the how they calculate the interest. It's not a huge difference, but there is a slight difference. So that's taken into consideration in the financing box as well. So these analyzers will be provided to you in the attachments as well. All right, so let's take a look at some pros and cons of the buy and hold. Let's take a look at the pros first. Revenue for life. It's slow and steady, as I mentioned before, but it is truly passive income for the long term. It's a very stable source of income as well, so that goes back to being recession resistant. I also mentioned that you get to benefit from all the profit centers should you wish to do so. The cash flow is an obvious one. Principal pay down, the debt gets paid down every month, so your equity grows. The property is going to appreciate in value through market conditions, plus good management and increasing the profitability of the property. Instant equity when you bought the property is really important as well. Leverage, the fact that the banks, the lenders will lend against commercial properties. Well, any buy and hold property, but the bigger commercial properties especially is easier if you're self-employed. Again, more information about that in the Apartment Building Wealth Generation Program. Depreciation, this is the one you may or may not want to use. For myself personally, if I'm going to hold that property for a long period of time, I'm talking, my goal is 10, 15, or 20 years hold, then I will use depreciation. If I'm going to plan on selling that property within 5 years, then I will not use depreciation simply because you have to recapture that depreciation when you sell the property. Again, that's entirely up to you, and I highly recommend you discuss that with your accountant to decide whether that's a valid strategy for you to implement or not. And then there's the reinvestment. This is a big one because one particular property I have, it's probably the best property I bought, and I've been able to refinance that twice and pull equity out of that property. I pulled $150,000 out at the time that I bought it. I pulled another $100,000 out within the first year of owning that property. What are we now? We're 8 years into ownership of the property, and I've just pulled another $100,000 out of that property. And all along, it's still cash flowing at $20,000 a year approximately. So reinvestment is a massive profit center that you can take advantage of with the buy and hold strategy. There's also the reduced taxable gain. So when you have a piece of real estate that you sell for a profit, that profit is taxable. If it's a short-term hold, for example, if it's a flip or a lease option, 100% of the profit is taxable. If it's a property that you're selling from your buy and hold portfolio, only 50% of that tax is, or that gain is taxable. And in the U.S. market, that taxable gain can be deferred if you are to reinvest in an equal or more valuable property within a 6-month time period. If you do not reinvest into another buy and hold property, investment property, then you'll have to pay tax on that taxable gain as well. Some of the cons to it, though, is that I was taught, and I have taught, and most people are of the mindset and belief that when you buy investment properties for the buy and hold, you're going to buy them fully financed, and you may want to keep them fully financed as well in order to access the equity in it for other investment opportunities. Plus, it also helps reduce the liability from being sued, because if there's a lot of debt against your property, then it doesn't make it as lucrative a target for potential legal suits. So if that's the case, then your profit margin is going to be $75 to $100 per month per door. So if you've got a 10-unit building, that means you're going to have $750 a month to $1,000 per month cash flow coming in from that property. So it's not a whole lot, which obviously means that you need to have a lot of doors. So if your goal is to have $7,500 a month passive income, that means you're going to need to have 100 rental properties. And that's a lot of properties. The next one is liquidity. What I mean by this is that it's not like a stock that you can just call up your stockbroker and say, I'd like to sell all my stock today, and they activate the sale, and as long as there's a buyer, it's sold, the money goes in your account same day or the next day. With real estate, it is much more slow moving. Therefore, you decide to sell your property today, it could take you 2 or 3 months before you actually are able to get a sale, another couple months before the deal actually closes. So you could be looking at 2 to 6 months before you get your money out of it. Or if you want to take some equity out through a reinvestment, that doesn't happen overnight either. There's applications, finding the investor or applying to the bank, then going through the whole process. So you're looking at a month to 3 months in order to get equity out of the property as well. Also, the fact that it's considered to be passive income in the eyes of the government, they're going to tax that at the highest possible tax rate. So you may want to consider not holding your buy and hold properties in your own personal name, because you're going to be taxed at a higher tax rate there. So you may want to put it in a corporation where you can control the tax rates a little bit better. So again, this lesson is not to teach you about apartment buildings. It's just to highlight the value of investing in apartment buildings. If you to help you identify whether the buy and hold is an option when you are presented with strategy. So as I mentioned, in lesson 5, I'm going to present to you some options, and you have to decide whether this is a good buy and hold strategy, or a good lease option, or a good flip. If you want more information to learn more about how to buy apartment buildings or larger properties for the buy and hold strategy, then I highly recommend and suggest that you visit my apartment building wealth generation program to see if that's of interest to you. And again, in lesson 5, you're going to be presented with the opportunities. You have to decide which strategy is going to be best for you to use, and the whole exercise of lesson 5 is to help you open your mind to identify other options out there. So this goes back into module 1 about perception. If you have only one source of education and one focus, for example, is buy and hold, and you're presented with an opportunity and you don't see it working for you as a buy and hold, then you'll pass up that opportunity to make some significant cash. What I'm suggesting you do is you open your mind up to other perspectives, other opportunities, and just be able to generate more cash in the world of investing in real estate. So that's it for lesson number 1. Again, if you have any questions, feel free to fire off your questions to my email address, kbeaton@arcarealestate.ca. Of course, we will be doing the live review and webinar on the Wednesday night, and if you have any questions, email them in ahead of time. That's my preference, or you can ask questions during the call. All right, so that's it for now. We'll see you in lesson number 2.